Thank you for your interest in EZ ARO to meet your asset retirement obligation accounting needs. EZ ARO is a product of Financial Computer Systems, a company with over 40 years of experience in developing software to meet complex accounting needs. Our flagship product, EZ Lease, provides complete lease accounting with optional ARO accounting as well. For more information about EZ Lease, please go to our website, ezlease.net, where a video demo like this is also available. Asset retirement obligations are set up to reflect a future responsibility to expend resources associated with retiring an asset from use. This responsibility may be due to contract or law. Examples of this could include a gas station removing its underground storage tanks, a quarry or mine remediating its site, or a store removing leasehold improvements from rented space. The work to be done might be handled by your own staff or by an outside party. ARO accounting is specified for U.S. GAAP in FAS 143, also known as Accounting Standards Codification Topic 410. For those complying with international accounting standards, the relevant standard is IAS 37. The two standards are very similar. So let's enter a sample ARO. EZ ARO connects AROs to properties because a single property may have more than one ARO record. This could be the case because there are multiple obligations connected to different parts of the property, like multiple underground storage tanks for a gas station. So first we need to create a property, then we populate it with AROs. For our example, let's say that we have a gas station and we're installing an underground storage tank. We create a property number, which is how we get to the ARO to look it up and how output is sorted. A description is optional, but can clarify your property. It's displayed on most reports. The begin and end date for the property will be automatically calculated as the begin date of the first ARO and the scheduled end date of the last ARO if there's more than one. Now we'll set up an individual ARO. We'll call it low octane tank. The begin date is the date that the ARO was incurred, which is usually the date that the asset was placed in service. Sometimes you don't find out about an ARO until a later fiscal period. If it's now February and the ARO took effect in January, you probably don't want to reopen January's books. By entering a booking date in the current fiscal period, all activity from the begin date to now will be booked currently, and your beginning balance for the period will match the ending balance that you originally reported for last period. This also means that you can rerun reports for prior periods, which will be consistent with what was originally run. So let's put a February date in for the booking date. You can enter the end date either as a number of months of useful life or as a specified end date. We'll say that the useful life is 35 years. We have to enter it in months, so that's 420 months. Now enter the anticipated rate of inflation over the life of the ARO. This should be an average compounded rate. We'll say 2%. The future cost of the obligation is present valued to the begin date of the ARO using a credit-adjusted risk-free interest rate, which is a standard risk-free borrowing rate for the length of time involved, adjusted for the credit standing of the reporting entity. Let's say it's 8%. Sometimes you may have a range of possibilities that you want to combine. Maybe there's a 50% chance the cost will be $15,000, a 30% chance it'll be $25,000, and a 20% chance it'll be $10,000. You can enter multiple layers for an ARO with the varying probabilities to create a combined expected value. In most cases, though, a single valuation is sufficient, so you can leave the probability at 100%. We enter the current cost to satisfy the obligation. That is, what it would cost to dig up the tank today. This will be adjusted for inflation to get a future cost. Let's say $15,000. By the way, if you're not sure what a field means and whether or not you need to enter it, just press F1 and help for that field immediately displays. This text is pretty much the same as what's in the manual, which you get in both printed form and as a PDF file. The manual is some 80 pages and gives detail on both EZ ARO and ARO accounting concepts in general. So that's all that we need. Click on Save the Arrow, and EZ ARO calculates the future cost after inflation, the discounted cash flow, which is the present value of the future cost, and the net ARO, which adjusts for the probability percentage. If you want to enter another ARO for the property, click on Add ARO. Otherwise, choose Save Record to store the entire property record. Okay, the whole point of entering an ARO is to get reports on it. Let's start off with an accretion table, which shows month by month the activity on the ARO. On the Reports menu, we choose Accretion Tables. We'll start with a text report, which displays directly on the screen. And we'll take all the defaults and just run a report. Here you can see the ARO month by month. The accretion increases month by month because getting the present value of the expected future cost is a compounding operation. Note that the depreciation sometimes varies by a penny. That's because EZ ARO is tracking fractions of a cent to avoid rounding errors. In Excel, if you divide the ARC asset of 2028.92 by the 420 months of the ARO, it will show depreciation of 483 every month, but the cumulative total will sometimes increase by 484 because it's rounding behind the scenes. EZ ARO lets you see how the rounding is happening, so your activity and balances always tie out to the penny. This report is great to see the whole life of the ARO, but it's not as easy to work with when you want to book your current period activity. For that, you might want to use the Income Statement Balance Sheet Detail Report. So let's take a look at that. We can create a report for multiple periods, with periods either fixed or variable, or based on your company's fiscal calendar. Let's see how this ARO starts and continues for a month. So we'll start on February 1, 2008, the first month it was active in EZ ARO, and go for 2 months. All amounts are shown in debit-credit format, so a positive number is a debit, a negative number is a credit. At the end, you see totals for all the AROs in the database. We only have one, so it's the same as what you already saw, but you can see that there's also a summary count of how many leases are active, added, and terminated during the period. Maybe you want to get this output in Excel so you can manipulate it further. All of the reports in EZ ARO can be output to Excel in 2 ways. The text output has multiple export options, so you can get a copy of this output layout in Excel or PDF or several other ways. However, that's not really the best format for using in Excel because it includes these page headers and footers and other formatting that kind of gets in the way. So instead, EZ ARO offers a direct output format for Excel, designed specifically for easy manipulation, uploading to other systems, and the like. If we click on Spreadsheet for the output to, EZ ARO asks us to give a file name for the output. Note that creating Excel output requires that you have Excel installed on your computer, but if you don't have that, EZ ARO can create XML or comma-delimited spreadsheets as well. Now we click on Generate Report again, and the report is created. While we have the same information, it's formatted a bit differently. We only have one header for the entire report, and on each row we list the basic information for each property and ARO, property number, description, ARO name, begin and end date, and the like, so that if you want to resort the rows, you're not losing the connection between the different pieces of information. This is a basic principle of all the spreadsheet output reports. On each row of output, the property number and other basic information is shown, so you can sort and select rows without losing track of which row belongs to which property in ARO. So if you have several AROs and want to group the rows by payment date, you'll see which AROs recognize which expenses for each period. Sometimes it's easier to understand what's happening or easier to book your general ledger entries if the activity is restated in journal entry format. So we offer a report for that as well. We'll again choose 2 periods, spreadsheet output. Now you can see each transaction that happens for the ARO, with the accounts involved, the amounts in debit and credit column format, and a brief description of the transaction. You can also get a listing of all the data you've entered for the property. This creates a report for everything you've entered, for all the leases, for all the AROs or the subgroup you select. So that's a quick overview of what EZ ARO does. We haven't covered everything, like space for descriptive information, setting up account numbers for general ledger bookings, and reminder notices, making adjustments to an ARO or some of the reports. I invite you to download the EZ ARO trial and test it out fully, or contact us for an online live demonstration. Please visit our website at aroaccountingsoftware.com.